dear traders, you are watching a weekly link up on InstaForex TV channel with me, Kate Stichina. In our program, we discuss the ongoing situation on Forex and forecast further moves of popular currency pairs. Technical analyst Petr Yakimovic will give us his expert advice. The trading week speculators revived risk sentiment that has made an impact on the most popular currency pair. The single European currency is closing the week on a negative note against the US dollar. Hi Petr, from your viewpoint, how will the euro move against its American counterpart in the short term?
Hello there, traders. On the euro versus US dollar, basically what I found is the price is trading inside the trading range and let's say in the middle of the Bollinger Bands. This is basically a sign that this currency pair is in equilibrium and that opportunities are not big at the moment of this currency pair. Anyway, if you want to trade inside this trading range, I advise you to watch more for selling opportunities than for buying opportunities. Basically, what I found is there is a solid support, which can also be the first downward target if you plan to trade inside of the trading range. And the first target is at the price of 1.2236. If you see the valid breakout of this support, which is also a minus 2.1 standard deviations from the 50 average, this can lead, the valid breakout of this level can lead us to 1.2155, which is a very solid support based on the price action. So again, this currency pair is in equilibrium, but if you want to trade inside of this trading range, my advice watch for selling opportunities with a first target at the price of 1.2236.
Now let's discuss another European asset, the pound sterling. The pound-dollar pair is losing its appeal gradually compared to a rapid change in trading sentiment on the euro. Could please share your outlook for the pound-dollar pair?
On the British pound versus US dollar, basically what I found is that according to the daily time frame, there is a successful test of the plus 2.1 standard deviations from the 50 moving average, and this is basically the upper band of the Bollinger Bands. This is actually quite strong resistance, and my advice to be very careful if you plan to buy this currency pair. Also, I found that there is a hidden bearish divergence on the percentage Bollinger indicator, and this is another sign of the weakness. So my advice is basically to watch for selling opportunities, and the downward target basically set the price of 1.3725, and this is basically a strong swing low from the background. It's also minus 2.1 standard deviations from the Bollinger Band. So watch for selling opportunities due to potential extension of buyers, and strong resistance is in the place at the moment.
Interestingly, the US dollar is eventually picking up steam that is especially evident in the dollar-yen pair. Though the pair is still trading low, it has gained momentum to develop an upward trend. Can market participants expect the bulls to enter the market?
On the USD versus Japanese yen, basically I found a very interesting opportunity because according to the 4-hour time frame, I found there is the supply entered the market from the plus 2.1 standard deviations, and there is a successful rejection from the upper band of the Bollinger Bands indicator. So there is also additionally, I found that there is a strong supply trend line in the background, and this adds more weakness into this analysis. So I expect that the price starts to go lower, and this is a potentially very good opportunity for selling. The first downward target is at the price of 105.85, and this is basically the middle of the Bollinger Band, the middle line. And the second target basically is at the price of 104.65, and this is a minus 2.1 standard deviations from this Bollinger Band position at the moment. So again, a strong rejection from the supply trend line, successful rejection from the plus 2.1 standard deviations from the 50 moving average. This all indicates that we may see a lower price in this currency pair, so watch for selling opportunities.
Would you like to discuss another trading instrument?
I found an interesting opportunity on the Australian dollar versus New Zealand dollar. Basically, according to a daily time frame, there is a price tried to visit the minus 2.1 standard deviations according to the daily time frame. It actually, I found that the price failed to test that level, but there is actually inside candle formation. The price actually took the high of this inside bar, and I expect the price to at least rally and test potentially 1.0750 because this is a swing high and there's a solid resistance based on the previous price action. So again, there is an extension. There is a successful rejection of the minus 2.1 standard deviations. There is a hidden bullish divergence as well on the percentage Bollinger indicator. So I absolutely advise to watch for potential buying opportunities and try to benefit of this potential upward move and this potential rally.
Thank you, Petar, for your trading recommendations. See you next Friday. You have watched the weekly link up on Insta4X TV channel. This edition was presented by me, Kate Stihina, and Petar Jakimovic, a technical analyst of Insta4X office in Serbia. We wish you fat profits and a nice weekend.